And on today's show, how to use accelerated benefit riders. Part 3 of this week's series on selecting the right long-term care coverage with long-term care expert Maria Sarchi. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician in Innsmouth. Let's get down to business. Well, welcome to the show, Maria.
Hi, Steve.
Well, I loved yesterday's show. If you didn't catch it, it was huge. I mean, I really loved your potpourri of linked benefits. You went through annuity linked benefits. You went through life linked benefits. We were talking about doing a little combination. I love the Pension Protection Act, everything we talked about yesterday. If you missed it, hop back out on the site and say, Steve, I didn't even know about the laws of the Pension Protection Act. If you want to write me at steve@downtobusiness.tv, I'll send you all the information on the Pension Protection Act as it relates to long-term care. It's really huge. Today we're talking about something totally, well, it's not really totally different, but boy, in my mindset it is. Yesterday we're talking about long-term care being the prime feature and annuities and life insurance being the secondary. Today we're flipping it. Now we're talking about life insurance and our annuity policy being the number one driver with these secondary benefits called accelerated benefits. Walk me through what is accelerated benefits. When you get that done, tell me why that's different than what we talked about yesterday with hybrids.
Yeah, great questions. And so accelerated benefit, think of it as the ability to use the life insurance component of your policy as a living benefit to cover chronic illness or a long-term care event. So if I'm a client and I have a $500,000 worth of life insurance, if I have a chronic illness or if I have long-term care, depending on the type of policy you buy, and we'll explain the differences in just a minute, I have access to that $500,000 to help cover my expenses. And usually it's at a rate of 1, 2, or 4% of that value, and the coverage will last until my entire death benefit is exhausted. Or accelerating the benefit as a living benefit.
Now, are there different rules? And our other rules, as long as we qualify for our 2
out of
ADLs
6,
out of 6, we're done. Go. But is that the same rules here?
It is.
It is.
The difference between the chronic illness rider, Steve, on the accelerated benefit product, and a true long-term care rider is that in the chronic illness world, the individual's condition has to be permanent, remain with them forever, that they will never recover from it. In a long-term care rider space, and by the way, these products come with either or. Some carriers choose chronic illness, some carriers choose a true long-term care rider. If I choose a carrier or an insurance company with a true long-term care rider to it, then my condition does not have to be permanent in order for me to access my benefit. But in the chronic illness solution, it does.
Now, if I was in good health, but I had family history that lent itself in later life to chronic issues, this could be a big decision-making process to go through.
It could be. You know, I find it to be about personal preference. Individuals will say to me all the time, which solution do you think is the best? I can't answer that question. Depends on the individual situation and what they're looking for. The key questions we asked last week, number 2 was, what is the key benefit driver? What is the objective you're really looking to achieve by doing this type of planning? If somebody says life insurance is first and foremost, I will likely start my thought process with the accelerated benefit for that individual.
So let me make sure, are some of these accelerated benefits embedded in the policy and actually have no additional cost like a rider would?
In the chronic illness space, yes. The long-term care riders are primarily paid for with additional premium.
Okay, so it costs a little bit more to have LTC accelerated riders on these policies. Now, you've been in this a long time now, and I know that you don't ever like to settle on one thing or another because every client's different. But have you ever seen, I'd love to know the economic value between, I just have an LTC hybrid, and I want to know the benefit of an accelerated LTC on my same annuity and or life insurance. I guess I'm trying to see where's the significant difference here.
The question comes up all the time, and it's funny because it mainly comes from the advisors, not the consumers. An advisor will call and say, show me everything in your product suite. I want to see the standalone products, the life hybrids, I want to see the accelerated benefit, and I want to see where my client's going to get the most bang for their buck. And
I am sorry, but I actually think that way as well.
Yeah, that's okay.
I just do.
You know, it's how long-term care education was first taught. We were taught 15, 20 years ago to spreadsheet this stuff, right? Buy the company that's going to have the least expensive premium. Well, that's not what our market is like today at all. Today we're looking at what the key benefits are for the client. Are they looking for the higher death benefit? Are they looking for better long-term care leverage? Are they looking for income solutions? All of these things have to be taken into account. Because if somebody is trying to line up side by side all of these different solutions and they're trying to do it based on premium, it's not a fair comparison. You're getting more with some of these hybrid solutions covering twin risks, right? Dying too soon or living too long. In the standalone long-term care space, if I'm trying to compare $4,500 a year in annual premium for standalone long-term care, that same client for the same long-term care benefit, that premium might be $7,000 a year. The difference is my $7,000 a year also gave my family or my heirs a life insurance benefit when I died.
So this is really a lot of comparison. I love your second question because it's really going to steer me where I need to go on
That's
this
right.
and really quantify what am I doing? Accelerated or am I doing a hybrid?
That's right.
I love this idea, and I think a lot of the mechanics, I know you have a ton of resources on this to really help us make a right decision. When we come back, we're going to continue our talk, and I want to talk a little bit about the differentiation between chronic illness and long-term care on accelerated benefits, because I think we kind of mix that together a lot,
Yeah.
and I'd like to clarify that. We'll be right back after the break. It's not how much money you make for your clients, it's how much money they get to keep, especially in retirement. But retirement income could cause Social Security benefits to be taxed. One tax advantage alternative is life insurance designed as a non-modified endowment contract that can generate tax-free income without taxing Social Security benefits. These contracts offer differing funding options depending upon your client's risk tolerance. For more information on how life insurance can be part of your retirement planning, just email me at steve@downtobusiness.tv. Brought to you by Ash Brokerage, the practice enhancement company. Well, welcome back to our second segment, and of course I'm with Maria Sarchi. Maria, you're walking us through all these possibilities. I really love it. I want you to talk a little bit about this because even I, the savant, gets confused. I get confused sometimes between chronic illness and long-term care when it comes to accelerated benefits. If this would be standalone, I get it.
Yep.
But now when we put it on accelerated benefits, it seems to change the definitions and the way we operate. Help me out with that.
Well, I guess the easiest way to do that is to understand that chronic illness, condition forever, long-term care rider, I could in fact recover from the condition. The triggers are the same for both. My inability to perform 2 out of 6 daily activities of living.
Okay, let me stop there. So the ADLs are the same for chronic as they are for long-term care.
Yes.
Okay.
The difference is that with chronic illness riders on my accelerated benefit product, I have to show proof that my condition will last indefinitely, that I will not recover from it.
Okay, so we're saying that long-term care, whatever if my impositions are and I have to use my long-term care, that is a temporary issue.
It could be.
It could be.
You have more flexibility. When you look at an accelerated benefit product.
Well, how would I know how to file then? Which one would I file? How would I know?
Well, because you're purchasing your product before you have a claim. You're purchasing your product before you trigger benefit.
So I might have both of these.
You might, but what we often see clients do, Steve, is choose to either say, look, the fact that this chronic illness rider is embedded the cost into my policy, knowing that I may need it if I have a true long-term care event, I can self-insure the rest. We let the chronic illness rider work as it is. Some folks say, I don't want to be limited to only trigger benefit when I have a permanent condition. Their peace of mind approach to it is that they want a rider that may or may not be chronic, may or may not last forever. Again, I'll use that example of a hip replacement or a knee replacement, where somebody may need care for a period of months, but we know they'll recover on the back end.
Okay, so this is when you start getting in the weeds when you're having your conversation with your client. We're getting into some detail now.
Yeah, and it's interesting because it's not something that most advisors get into the weeds with their clients on. Do you want chronic illness or long-term care? For them, it's about, I want to use my benefit as a living benefit. End of story.
I think my question would be, hey, do you have any propensities in your family history for chronic disease? Do you have any impairments that seem to show up generation after generation? Is it coming at the time of 60, 65, 70?
Yes.
Did your parents experience long-term care and it was always in a nursing home confinement? I think historicity would give me a little bit better opportunity to say, I think my bet is, I'll have the same chronic issues that my parents had.
Yep.
It seems to be congenital. I think I need to go that way.
Yep, and certainly one way you can do it. Another way to do it, and probably one that we'll see happen more often, is when an advisor is talking to a client about life insurance, and they're looking at a particular life insurance contract, and they know there's a chronic illness component to it, to be able to say, Ms. Client, for a small nominal fee or embedded in your plan itself, you have the opportunity to use your life insurance benefit as a living benefit with chronic illness. That's simple.
I, Steve, the advisor, when I'm looking at if everything is equal, and I'm looking at, let's just use the life contract, and I'm looking at accelerated benefits, I'm going to be looking now all of a sudden if my death benefit is pretty much the same from carrier to carrier to carrier, this stuff, these secondary items become a big important issue now.
Yeah.
What's embedded? Oh, this one isn't embedded. I have an extra cost to that.
Right.
I still need to start weighing this out.
Yeah, but remember, one of the first questions we ask the consumer, what are the key drivers of why you're looking at this? We've already identified, they know somebody who's had care event, right? We've found some common ground. Second question is, what is the key objective that you want to come out from this? I know I keep saying it over and over, but truly when your audience is saying, how do I start this? How do I get into the conversation? What's my starting point? That's it. My recommendation would not be to put all of these solutions in front of the consumer.
Well, I like it. When I'm thinking of accelerated benefits, I've already determined in my mind through a discussion with my client that either the life or the annuity contract, that's what's driving this. The secondary issues are, hey, chronic illness, LTC, okay, fine. So I'm looking at that kind of thing, or even, the acceleration of the death benefit for whatever reason. I'm going to die, and that's the way it is. So when I'm looking at these, I just think that most advisors, they say, okay, I really know, I recognize this is a major component. I've been somewhat derelict in putting it into my retirement model. I'm willing to now put this in here. I have so much to learn, and I think people are watching these 2 weeks. They're going, man, my learning curve is steep here because I really haven't really thought this through. So when we're talking about accelerated benefits, some are embedded, some are cost. They act differently on a life chassis than they do on an annuity chassis. Talk a little bit about that because there's a whole nother issue.
They do. The leverage is somewhat the same. Accelerated benefit and the hybrid annuity solutions, they're somewhat the same. But the difference is that annuity is an annuity contract and life insurance is a life insurance contract, right? The beauty in this is that now you can say to that 40-year-old client, 50-year-old client, 60-year-old client who's looking at either of those solutions, have you thought about care planning? Well, what's that? I didn't say nursing home. I didn't say long-term care. I said care planning. Did you know that these two solutions, which you're looking to incorporate into your planning anyway, can be elevated to add a component to cover in the event you have a long-term care need? Sometimes it's just as easy as that.
Well, that's all the time we have for today. Remember, before moving forward with any of the ideas you hear on our show, always consult your tax advisor, legal counsel, or your broker-dealer compliance officer. Miss an episode? Just go out to our video archives. And remember, you could be wiser as an educated advisor. I'm Steve Savant. We'll see you tomorrow.